COVID-19 has brought the global economy to its knees.
The pandemic has been an enormous synchronised global economic shock on a scale which has not been seen since the Second World War.
By the end of 2020, the world's GDP may be about 7.5% lower than it would have been without the pandemic.
For a country that doesn't have the capacity to provide the kind of fiscal and monetary support on a scale that advanced economies have done, the cost is huge.
The Indian economy is entering into a decisive phase in the fight against the pandemic.
Greetings everyone. So the topic ramification of policy changes tell us about how a government is changing their different policies in accordance to the COVID-19 pandemic. They wanted to revive our economy as soon as possible so the daily businesses go as usual as it was before COVID-19. What are the policies that government has adopted till now? Government has announced a 20 lakh package. So most of the package talks about giving loans to MSME sectors, and for banks also government has announced 20,000 recapitalization, which bank may use to give loans to various parties and individuals and small businesses. So the supply side of the economy is taken care of, but government till now had not done significant work on the demand side of this. Whether the government will bring some policies which will increase the demand side is there to see. For individual person whose earnings were hampered during this lockdown period, government had introduced moratorium policy for around 6 months maybe, and also the government has reduced the repo rate from around 90 bps. So the larger question is whether the policy changes by the government is going in the right direction. If not, what is the right direction? The second question is whether the government has introduced enough policies changes, or government has to do more about this current policies, whatever they have changed.
The MPC voted unanimously to leave the policy repo rate unchanged at 4%. The reverse repo rate also stands unchanged at 3.35%. Real GDP growth in the first half of the year is estimated to remain in the contraction zone. For the year 2021 as a whole, real GDP growth is also estimated to be negative. Additional special liquidity facility of rupees 10,000 crore will be provided at the policy repo rate to the NABARD and to the National Housing Bank. And this will consist of 5,000 crore to National Housing Bank, NHB, to shield the housing sector from liquidity disruptions, and it will also consist of 5,000 crore to the National Bank for Agriculture and Rural Development, that is NABARD. As per extant guidelines, loans sanctioned by banks against pledge of gold ornaments and jewelry for non-agricultural purposes should not exceed 75% of the value of gold ornaments and jewelry. With a view to mitigating the impact of COVID-19 on households, it has been decided to increase the permissible loan to value, what they call LTV ratio, for such loans to 90%. This relaxation shall be available till 31st March 2021. It has been decided that stressed MSME borrowers will be made eligible for restructuring their debt under the existing framework, provided their accounts with the concerned lender were classified as standard as on March 1st, 2020. This restructuring will have to be implemented by 31st March.
The Reserve Bank has achieved an interest rate cut without cutting the repo rate. In a sense, that is a truly successful policy.
They have given a lot of comfort on liquidity. They are not only giving fresh liquidity in the form of TLTRO, but they are also giving the flexibility for banks who are having surplus liquidity to take back that liquidity. And then they are clearly signaling that the priority is now growth over inflation. Now that they are seeing green shoots in the economy, they would actually like to, give priority for growth so that the recovery is kind of sealed.
He also extended the moratorium on term loans by another 3 months. So this looks like, both the fiscal side and the monetary side of the Indian economy are working in tandem to try and keep pushing the economy so that it doesn't get stuck in the slowdown mode and the negative mode.
Extension of the moratorium was critical because, when you ask people to repay when they don't have the money, then a lot of the loans would have gone bad and banks would have had to declare them as NPAs and get into trouble.
Banks have been cautious. What will change now?
What would be the broad approach of RBI's policy going forward.